Have you ever heard of the Berkshire Hathaway Annual Meeting? If you're an investor, you absolutely need to tune in. This isn't your average stuffy shareholder meeting. It's a chance to hear directly from two of the most successful investors of all time, Warren Buffett and Charlie Munger. They cover all sorts of fascinating topics, from the state of the economy to their latest stock picks, and they do it all with a level of insight and wisdom that's impossible to find anywhere else. Now, I know what you're thinking. A 6-hour Q&A session? That sounds like a marathon, but trust me, every second of it is worth it. And if you don't have the time or patience to sift through the entire event, don't worry, we've got you covered. In this video, we've prepared some snippets from the 2023 Berkshire Annual Meeting just for busy folks like you. Number 1. Silicon Valley Bank Failure. Speaking of important insights, one attendee asked Warren Buffett about the economic consequences if Silicon Valley's bank deposit had not been fully covered. Here's what he had to say.
Well, I would just simply say it would have been catastrophic. And that's why they were covered. I can't imagine anybody in the administration, in the Congress, in the Federal Reserve, whatever it may have been, FDIC, I can't imagine anybody saying, I'd like to be the one on television tomorrow and explain to the American public why we're keeping only $250,000 insured, and we're going to start a run on every bank in the country and disrupt the world financial system. So I think it was inevitable.
Number 2. Artificial Intelligence, Elon Musk. When asked about the future of artificial intelligence, both Warren Buffett and Charlie Munger agree that it's becoming more important, but remain a bit skeptical about the hype in this industry.
So we're going to see a lot more robotics in the world. I am personally skeptical of some of the hype that has gone into artificial intelligence. I think old-fashioned intelligence works pretty well.
There won't be anything in AI that replaces a gene. I'll state that unqualifiedly. It can do amazing things. Bill Gates brought me out the latest, maybe not the latest version, but one he thought maybe I could handle, which has to be careful with me in terms of leading me too fast. And it did these remarkable things. It couldn't tell jokes. Bill told me that ahead of time, and it prepared me, and it just isn't there. But things like checking all the legal opinions, since the beginning of time and everything, and eliminating all the it can do all kinds of things. And when something can do all kinds of things, I get a little bit worried, because I know we won't be able to uninvent it. And, we did invent, for very, very good reason, the atom bomb in World War II. And it was enormously important that we did so. But is it good for the next 200 years of the world that the ability to do so has been unleashed? We didn't have a choice, but when you start something, well, Einstein said after the atom bomb, he said, this has changed everything in the world except how men think. And I would say the same thing not the same thing, I don't mean that, but I mean with AI, it can change everything in the world except how men think and behave. And that's a big step to take. It's a good question, and it's the best answer we can give.
Number 3. Commercial real estate. When it comes to commercial real estate, Berkshire has never been very active in that area. However, the pandemic has led to the hollowing out of downtowns in the United States and elsewhere in the world. According to Buffett, this will have a significant and unpleasant effect, but he believes that the country will get through it all right. Regarding real estate, Warren Buffett and Charlie Munger expressed their views on the mentality of many real estate operators and the lenders that finance them. Buffett quotes Munger as saying,
The answer is it's whatever they can borrow without signing their name. And if you look at at real estate generally, you'll understand what the phenomena that's happening if you remind yourself that that's the attitude of most people that have become big in the real estate business, and it does mean then that the lenders are the ones that get the property, and of course they don't want the property usually, so then the real estate operator counts on negotiating with them, and the banks tend to, extend and pretend, and there's all kinds of activities that arrive out of commercial real estate development, which occurs on a big scale, but it all has consequences, and I think we are starting to see the consequences of people who could borrow at 2.5% and find out it doesn't work at current rates, and they hand it back to somebody that gave them all the money they needed to build it.
Number 4, U.S. dollar as reserve currency.
It's very interesting. I mean, we are the reserve currency, and I see no option for any other currency to be the reserve currency. And I think that nobody understands the situation better than Jay Powell. But he's not in control of fiscal policy, and every now and then he drops a few hints. And there was no question that when the pandemic broke out, I mean, it was a semi-war-like situation, but nobody knows how far you can go with the paper currency before it gets out of control. And particularly if you're the world's reserve currency, nobody knows the answer to that. And you don't want to try and pick out the point at where it does become a problem, because then it's all over. I think we should be very careful. I mean, we all learned Keynesianism, and we applied it in World War II to the advantage of the country, and we did everything we could to prevent inflation during the war. And then the war ended in August of 45, and I think in January 46, and I'm not giving you exact figures at all now, but in January 46, I think the rate of inflation was at something like 1% or thereabouts. And by the end of the year, I think it was at like 15%. And again, I'm doing this from long memories, but it's easy for America to do a lot, but if we do too much, it's very hard to see how you recover once you let the genie out of the bottle, and people lose faith in the currency, and they behave in an entirely different manner than they do when they feel that if they put some money in the bank or have a pension plan or whatever it may be, that they're going to get out something with roughly equal purchasing power. And it just changes the economy, and all kinds of things can happen then. And I can't predict them, and nobody else can predict them, but I do know they aren't good. And we will see. And I do this as I voted for both parties, and it's not limited to politicians of either party or anything of the sort. People take positions. Some of them understand what they're doing. Some of them don't understand what they're doing. If they put me on some medical board, I don't understand what I'm doing. It's not that there's nothing wrong with the fact that you can't master everything. You can't all be Isaac Newton, but you can't go around pretending you do or making decisions on it. And we are not as well off in relation to curbing inflation expectations, which become self-fulfilling, then we are not as well off as we were earlier. And Berkshire is better prepared than most investments for that kind of a period. But I said this in the annual report, but we aren't perfectly prepared, because there's no way to perfectly prepare. You don't know what course of action will occur. And It's a very political decision now. It's a tribal decision to some degree. And you hope for leadership that actually will do something, recognizes the problem. And America's an incredible society, rich. We got everything going for us, but that doesn't mean we can just print money indefinitely as debt. And it'll be interesting to see how it turns out. Charlie?
Number 5, value investing. This is one topic that Warren Buffett and Charlie Munger had different views. Charlie Munger sees that there's less opportunities in value investing because the field is more competitive, while Warren Buffett still remains optimistic.
Are going to have a harder time now that there's so many of them competing for a diminished bunch of opportunities. So my advice to value investors is to get used to making less.
And Charlie has been telling me the same thing the whole time we've known each other. I mean, we get along wonderfully because...
So we are making less.
Yeah, well, but that mostly, I think, is because it's larger.
When we were younger.
No, we never thought we could manage $508 billion.
No,
or what, or five. But I would argue that there's going to be plenty of opportunities. And part of the reason there are going to be plenty of opportunities, the tech doesn't make any difference or any of that. I mean, if you look at how the world's changed in the years since 1942 when I started, you'd say, well, how does a kid that doesn't know anything about airplanes, that doesn't know anything about engines and cars, and doesn't know anything about electricity and all that? But that really isn't that's not the world changing doesn't, or new things coming along don't take away the opportunities. What gives you opportunities is other people doing dumb things. And it's that. And I would say that, well, the 58 years we've been running Berkshire, I would say there's been a great increase in the number of people doing dumb things, and they do big dumb things, and the reason they do it to some extent is because they can get money from other people so much easier than when we started. So you could start 10 or 15 dumb insurance companies in the last 10 years, and you could become rich if you were adroit at it, whether the business succeeded or not, and the underwriters got paid, and the lawyers got paid. And that creates, if that's done on a large scale, which it couldn't be done 58 years ago, you couldn't get the money to do some of the dumb things that we wanted to do, fortunately. So I think that investing has disappeared so much from this huge capitalistic market that anybody can play in, but that the big money is in selling other people ideas. It isn't outperforming. And I think if you don't run too much money, which we do, but if you're running small amounts of money, I think the opportunities will be greater. But then Charlie and I have always differed on this subject. He likes to tell me how gloomy the world is, and I like to tell him we'll find something, and so far we've both been kind of right.
Thanks for watching, and don't forget to like and subscribe to our channel for more insightful videos.